1.2 minutes remaining. We did all our research and analysis. Should be fine.
Bottom of the hour, assuming everything hits all at once, I will lead off with core CPI seen up 0.3 month on month. The annual core CPI seen at 3.7%, down from 3.8. Headline CPI seen rising 0.3 month on month, and the annual rate of headline CPI seen rising to 3.4% year over year from 3.2.
So yeah, we're now 1 minute away. So let's see what CPI does. Everything is done now. We have done our analysis. We have done our risk management, looked at the data, placed our stops accordingly, looked at the fundamental aspects as well. Yeah, so we decided to go with New Zealand dollar to short. Let's see, we're ready. Everything is done. Let's see how this goes ahead. We're basically 30 seconds away now. Once everything is done, I'm planning to kind of break everything down, which is easier. I think it's so much harder to kind of explain what's going on, you know, with the team while you're trading live as well at the same time. And it's quite distracting, which I don't think is a good idea to do. So I'm going to do what I have to do, kind of show you like the in action experience, what's going on.
10 seconds to the bottom of the hour.
And then, yeah, break it down afterwards. So yeah, 10 seconds in now. CPI should come in.
It's 0.4 month on month for the core, above expected there. Core year over year unchanged at 3.8. CPI headline 0.4 month on month matches the prior but above expected. Year over year 3.5%, rises from 3.2. So hotter than expected metrics here for CPI in March. Just recapping these. Core CPI month on month 0.4. That matches the prior rate but above the expected 0.3. Core year over year 3.8 is unchanged, but we had expected that to go down to 3.7. Headline 0.4 month on month, above the expected 0.3, matches the prior rate. The year over year 3.5%. We had expected a rise, but to 3.4 from 3.2.
So yes, guys, CPI, as you guys can see, came out very short, very bearish, as expected. All the analysis and the research that we done with the team was very accurate. So we did basically.
Okay, so the status is that we closed the trade for 1.25% on the main portfolio. It was beautifully predicted, absolutely noted.
Fantastic job, very well done. Yep, looking good. I think it was very, very smooth. Everything was done correctly as well, once again, so happy with that.
Yes, everything went according to our plan. Beautiful move. Yeah, so just to correct, our main portfolio right now is at, for this week is at 1.34, yeah, around 1.3, 1.4. So yeah, it was a good week.
So yes, guys, yeah, getting a bit busy, you know, after. Yeah, the news came in very nicely. I mean, I closed it a little bit early because I don't want to see any unexpected move back to the entry or even opposite end. So that's why I closed it early, banked in 1.25% on this move, which I'm very happy with. Initially, our target was 60 ticks, which it would have been hit. But I'm not too mad about that, you know, what you have to take what the market gives you. And in this case, we took 1.25 home, which is fantastic, you know, so we're happy with that.
Bloomberg briefed Danny Berger and Manus Cranny in New York. So it was another hot CPI. You get a mass global bond sell-off, the worst day for global bonds since the banking crisis, with traders adjusting their rate cut bets once again.
Price index rose 0.4%. In March, prices are up 3.5% in the last 12 months. The increase was driven by the rising cost of rent and gas. These latest numbers are raising questions about when the Fed will cut interest rates.